Good morning, everyone. Welcome to our Tuesday morning trading room. Just a moment, we'll get the screen share going on. So yesterday, interesting kind of day. After all, the market's spending a lot of time in a more or less sideways pattern, as we expected, and then a big rally up into the close. And that rally seems to have continued for the most part through the Asian session and the overnight session. So the market leaving off yesterday somewhere around 67.10, 67.20, opening up here near 67.50. We've got ourselves a downside gap, and it'll be interesting to see whether traders try to get into that. All right, hold on here a second. There we go. All right, while we're waiting for the market to get its bearings, I see David has posted a question here. David asks, I'm interested in getting market replay data. Unfortunately, the program that comes with Ninja will only allow you to download 1 day of data at a time, and that isn't enough data to run Raptor 2. There are a couple of vendors that supply programs for downloading a lot more data, enough to run Raptor 2. One is Market Replay Net, the other is MarketReplay.com. Do you have any thoughts on which of these is best? I have no experience with either of those, David, but I'm surprised that Ninja only allows 1 day. Where is my market replay? It's been so long since I've done it. Oh, I guess it's this here. Before the end of today's session, remind me, or if you have to head out early, David, remind me, and I will show you how to do the market replay. I do believe you can download as much data as you want. I've never had an issue with market replay when I've done it. But granted, the most I've ever downloaded is probably 2 or 3 days. But at any rate, it's always been enough to make the DTS package work. So let's see here. They took a little bit of a move lower out of the open, but kind of falling flat. The Raptor showing it pretty good here. This is where the market opened. So far, our low only about a dozen ticks lower from there. We are getting a very, very early making of a trend change signal. The cloud's not fully crossed just yet, but they're trying to cross. We've got the pullback. If the market comes down from here, it will complete a #1 signal. That is the cloud crossover. You could anticipate that signal and park an order. I probably would do it here below the lows, however. Maybe cover above the high of the morning. That is a doable trade, by the way. But it's all still very early here. David is asking about my opening range lines. This is actually what we call a system add-on, and it's the initial balance lines from Indicator Warehouse, and it allows me to plot opening range, among other things. You can see you can plot other extensions and whatnot. Just a moment and I will get you that information. So if you go to Indicator Warehouse website and you search initial balance lines, it will take you here to the link, and it's just a very handy little tool. Okay, back now into the hard edge here on the Eagle and the Raptor. Whenever we encounter the hard edge, we always anticipate some sort of reaction. We are producing a red bar buy signal here, so the Eagle looking a little bit bullish on the surface, but like I said, still pretty neutral. You could treat this as a rule of three as well. This is the same thing that we just saw in the Raptor. And you could pretty much set up the trade in the same way. You're going to see your Raptor signal here now working that early number one signal. Again, the cloud's not fully crossed. That number one signal is only going to print once the clouds fully cross. So you see the clouds are messed up here or have a bearish bias, then they get a bullish bias, and you get that, oops, wrong button. And you get that little bit of a pullback, and then the market comes out and produces that number one signal. Well, here we have a very similar thing going on. We've got a bullish band that's trying to get bearish, and we've got a little bit of a pullback, and now the market trying to pick up a downtrend. So it's not a textbook, to be sure, but it does show a similar bias. If it fails, there's a very good chance we're going to produce a number one signal to the upside as the clouds cross now from a slightly bearish mode into a more bullish one. The Hawk, totally neutral, very, very sideways, as is the Raptor and the Falcon. You could do an OCO style order here. One cancels other, that's your bracket type order, and just trade the breakout one way or the other. In fact, why don't we do that here on the Falcon? We'll do an OCO. I'll buy above, and I'll sell below. Yeah, that looks like it'll work. And it's not a bad idea to have your stop strategy ready. And you can see the trade manager automatically provides me with my exit order. I may give it just a little bit more room there. And while that's going on, I had better cancel my other order before I forget about it. All right, a little bit of a reaction now near the highs. I'm going to hold my stops here for just a moment. Oh, there they go. They made a quick little swing. I may go into something slightly more aggressive, maybe like my parabolic mode. Up at the first resistance line, past the primary resistance. A slight hesitation maybe. Again, I think I'm going to hold my stops here. Oh, they're going to take me. All right, well, not a bad little move to start the day. One for the good guys. That's us. And now we're in a holding pattern again. There is a macro pullback signal building here in the hawk. It might be advisable to, rather than take it right on the hash mark, wait for a second push opportunity, or even take the signal above that high, just to make sure the buyers didn't blow it all out of the water to start. Here on the Falcon, along with our OCO order, we had a decent little trend change signal here and a late filter entry signal piggybacking on that. So a couple of decent signals. To start. You'll notice the Raptor producing the cloud crossover signal now. That's that number one signal. So the clouds crossed. So they go from a bearish cloud to a bullish. There's a little bit of a pullback here now as the signal. This is a valid signal. The only problem I'm having with this signal is where do I cover it? I can't cover it right here. That's too tight. Even though it may well work out, it's just too tight. The probabilities are not in my favor. I could risk it here to the hard edge. That's a little bit better. The ideal stop is actually down here somewhere, either this swing or ideally the low of the morning, but I'm pretty sure I can't afford that. No, I can't. Given my account size and what I choose to risk on a trade, that's a little bit out of reach. So when that happens, just wait for another opportunity. If you can't afford it and you're not prepared to take the tighter stop, just wait for a better opportunity. Yeah, Dan, good eye. Dan says we also had a first in sync eagle signal right here. Actually, I suppose you could have even taken this one here about a minute into the session. A red bar buy signal, so a buy signal with a bullish band. That would have been pretty aggressive. This one would have been a little bit easier to get a handle on. Also piggybacking on the OCO type breakout. So right now things definitely a little bit more on the bulls side. Or at least to start. grinding a little higher. I do expect the market to continue higher. So if you are long on this number one signal, I don't think you have any reason to panic. I think you'll probably get to your profit objective. Yeah, there you go. We're up to our high probability profit target, and there you go. You should have exited when they got up there. Looks like they were up there long enough to fill the orders. If not, bring your stops in relatively tight in case they do choose to bounce. But like I say, right now, things still pretty bullish for the NASDAQ. Not really getting a good follow-up signal. I suppose if you were looking at a second push opportunity here on this number one signal and you missed this one, well, this is one of these what we call discretionary signals. So you can look for a follow-up buy signal. And that's not just on the Raptor, but that's going to be on all your tools. Getting a possible late filter entry signal here in the Falcon. That could be interesting if it holds. Also a macro pullback now in the Hawk. So again, things continuing to be bullish. Or trying to be bullish. Oh, look at that, the Raptor producing a counter trend signal. And we got a 4-arrow consolidation here in the Hawk. So the signal's starting to mix a little. All right, the Raptor now maybe gonna try to sneak back to the hard edge of the trading band. It could be a little bit of a reverse here. We'll see if it gives me a slightly better test of the extreme. This test of the extreme that produced the signal was really quite quick. If I get one more test of the extreme, something a little bit more noteworthy, and then a reverse, that might be more of a viable short. We'll see. We'll just stay with this for a little bit. The Falcon actually trying to produce a trend change signal, and the Hawk also now with a red bar buy. So things may be with some slightly bearish underpinnings. See here the red bar buy, and oh, it's going to run away. The red bar buy signal is the counter trend signal in the Hawk, and what it does is it's actually a buy signal. So you get a red bar with a buy signal. This tends to develop near the end of a trend. This is a slightly weaker signal, not to be confused with the red bar buy on the eagle, which is a strong signal. I know. I wasn't very creative when it came to coming up with names for these. I should have actually called it something else, but there you go. And in fact, I might give it just a little extra on the entry. Just because it's counter trend, you don't want to get in too quick on a counter trend kind of move. Markets always need some room when they're trying to change direction. So the Falcon now completing the trend change signal. Here the Raptor still with that number 2 signal, trying to nurse that down here. Target would be here, the hard edge, 67.54. All right, here we go. We're going to get that retest that I was talking about. Oh, that was short-lived. Okay, so 67.54 I figured was my target based on the hard edge of my Raptor and the Eagle, by the way. So actually, maybe we'll make it easy on the market. I'll get out at 55 there. Note with the when you're doing the counter trend of the red bar buy, it isn't usually that far away that you're going to produce a first micro macro cross signal, and that's what's happening now here on the Hawk. We're going to get that first micro macro crossover signal. And because this is counter trend, I don't want to get too cute with the market. I think I'll take profit when and if they give it to me. Bring my break even up a little. They're trying. They're a little reluctant, but they're trying. Here we go. No, not yet. Come on. Problem with counter trend trades. Okay, it looks like this is going to be the test of the extreme now that I was expecting. I'm going to try to rally up a little bit, maybe get up as high as 67, 68. Hopefully no higher. Uh-oh. Oh, don't you dare. Don't you dare. Okay. I'm going to give it just a couple of ticks here on the stop side. because the markets do have a tendency just to fudge the high or low before potentially reversing. All right, there's the test of the extreme, the retest of the high. So here now, well, the Falcon's a little bit of a mess, but here on the Raptor, we've got that number 2 signal. This is a better signal to sell, and you can see it followed the hard edge bounce. It followed the number 3 signal. So you could short below this low of this candle right here, essentially shorting below the support and resistance line. So the resistance line 67.61 3/4. You could short, a couple of ticks below there. And my stop's currently just above the high of opening range. Opening range almost expired. I'm doing my best to be patient with this trade, but it's tough because, like I said, counter trend, trying to catch the reverse, not an easy thing to do. So here they go. They're drifting sideways, which again is characteristic of a potentially reversing market. If we get a breakdown below the 67.60 zone, there's a pretty good chance that the market is going to head lower, at least back to 67.55, and very likely even down here to 67.50. But first things first, if 67.60 doesn't give way, David asking, are these support and resistance lines based on pivot points? No, David, absolutely not. Occasionally they will coincide with a pivot, but that's by coincidence, not by design. These are actually my own creation, I'm proud to say, and they are actually based on price and momentum from what's been going on in the history of the chart. So they look back a few days and then they do their calculations based on price inflections and momentum. I know it sounds kind of complicated, and actually the programming is fairly sophisticated for it. Look at that, that 67.60 area just being so stubborn. Well, you've got a potential here for another OCO type order. You could short below 67.60, and you could buy above the high of the morning, above 67.70, and just let the momentum determine which way you're going. Right now, it looks like the buyer's still in control. Ah, darn it. They're going to tag me out here. Yep. counter trend. What can I tell you? That's all the more reason to journal your trades. I guarantee you that out of probably 80% of my losing trades are counter trend attempts. And have they flushed the sellers out of the market now? Excellent point, David. David asked, that being the case, why not stick with trend trades completely? You are absolutely correct. That would be smart. And that's not usually something people accuse me of. No, definitely stick with the trend trades. Like I said, journaling your trades will provide you with a lot of information about what's working for you and what doesn't work for you. Counter trend trades, they have the appeal of quick profits and usually smaller risk. So let's just take a look here. All right, so you remember the with trend trade that I was looking at, right? Here's that number one signal. And I said the problem with this signal is that it's not so much with the entry, but where do I cover the position, right? Do I cover it? I can't cover it here. That's going to be too tight. I could probably get away with covering it here. The ideal stop is down here, but that's too far away. I can't afford it. So a with trend position trades probability of direction, but it requires greater risk, if that makes sense. A counter trend trade, by comparison, offers you a lower percentage of success, but you can get by with less risk. So it's always a game of probabilities. With every single trade, you are either gaining probability of success, but it's going to cost you more risk, or you're trading off risk, you're assuming less risk, but you're also assuming a lower probability of success on the trade. So with the counter trend trades, it's very easy to define where our stops should be. And because we're looking for a potential reversal, the dollar amount tends to be smaller, but the chance that the market will actually continue lower is less likely. Now, what keeps making it inviting are things like this, because when the market does reverse, the move is usually fast and it can be very profitable. So there's always that little bit of appeal of a counter trend opportunity. And like I said, it depends on you. Trading is a very, very personal business. I know some traders who are very comfortable taking counter trend trades. They don't worry at all about the the lower probability of success, they're okay risking smaller amounts, hoping to get by with their profit target or a slightly larger gain. But you're right, I agree with you 100%. Sometimes the most difficult thing to do is stay with trend. Especially a lot of times the market doesn't look like it's going to keep trending, and yet it does. Yeah, this is a good comment here from David as well. David says, I'm thinking that if the counter trend trade doesn't develop fairly quickly, then it pays to get out of it. Yeah, and that's true too. Counter trend trades, by their nature, do tend to be a little bit faster. Because what tends to happen, so we had some buying going on right here. Right, this is the low of the reverse, the buyers came in. What tends to happen is when and if the market trades below there should be some follow through. We should start to scare some of the buyers out of their positions, and that's usually what fuels the move down. Because of course, if you were a buyer, your exit order is a sell order. So if we trade below here, it should scare some of the buyers, hit some of those exit orders, which are sell orders, and it should move the market down. But you're right, it didn't. It kept going sideways and tried it again, and then of course it just kept going up. So you're right. It's if a counter trend move takes a little bit too long to develop, yeah, maybe it's time to get more aggressive with your stops. In the meantime, we are waiting on the buyers again. There was a little macro pullback signal back here in the Hawk and a very nice late filter entry here on the Falcon as well. Late filter entry signal tends to be a fairly reliable signal. Develops when the trend line doesn't change color, but the filter goes out of sync and comes back into sync. And you'll see you're going to print a signal when that happens, and that confirms the bullishness of the signal, even though we're up against the next resistance line already. We'll see what that does to the market. They're slowing somewhat. Here's kind of a fun fact, speaking of counter trend trades. Very often the second attempt, and by second attempt, I'm not talking about, oh, well, this was attempt 1, this was attempt 2, this was attempt 3. No, all 3 of these are the first attempt to move the market lower. This now is the second attempt. Very often the second attempt will actually have a little bit more giddy up to it. So I'm going to once again show you the evils of counter trend trading. But hopefully this time the market will cooperate a little. what you'll see is, especially if we get below here, below this bar, which is 67.68 3/4. So if we traded 67.68, that's going to start to engage some of these exit orders from the buyers, and that should propel the market lower. The thing I don't like about counter trend trades, besides the fact that they're risky to do, is that they always block you from taking a with trend trade. Whenever you're counter trend, you're stuck because you can't take the with trend trade, if that makes sense. And are they going to tail off this time or not? Lots of activity today around 67.70. That seems to be a big number today. All right, so they're not really interested in moving counter trend. We'll eliminate that for the moment. And we got a little bit of a slow sideways grind. Oh, yes, right you are, David. David says that 67.70 is the high of the opening range. And it does tend to be a fairly influential number, the high of opening range. Like I said, sometimes the most difficult part of trading is just waiting them out. Picking your opportunities. We always want to be doing something. And unfortunately, sometimes doing something ends up costing you. And it has the inverse effect of what it is you're actually looking for. Yeah, David says the price has broken the uptrend line, and it most certainly has, but you got to be careful with these sideways, like I said, these sideways drifts that we have going on. I am getting a little bit more bearish again. You can see we're almost seems as though we're topping. We are producing yet another number 2 counter trend signal. We do have a second push opportunity on this one. All that means is we allow the signal to engage, and we see the current limit of the market. Really, the better entry is still down here below 67.70. That would confirm that the market is heading the other way. All right, well, it is setting up to be a promising short. The sellers have the control of the market. They swung the market right here. So whoever controls the last swing controls the market, and the buyers are trying to make a pushback. They need to get above 67.79 quarter, which is the resistance line. Oh, I'm really thinking I wonder if I should short below here instead. we'll leave it how it is. Here now the hard edge bounce, that's the number 3 signal. And if that reverses, then we're almost certain to see at least a short-term top come into the market. All right, here they go. This now the second attempt to sell, and did they slip me there? No, they didn't. Hooray. Slippage not usually a problem in a market like the NASDAQ, although yesterday it seemed there was I don't know, less participation, or the big players were just sitting on the sidelines. The big number again, 67.70. That's the one I need to see the market trade below if my trade's going to have any kind of follow through to it. Here comes that number 3 signal again. Look at that. The buyer's just not letting it go. My goodness, they're strong here this morning. Wow. That's crazy. Oh, what did I say about counter trend trades? Oh dear. The difference between trading at home and trading in a trading room is you guys get to see when I do something, how shall we say, stupid. Oh dear. Well, dug a little bit of a hole for myself. So I got a little bit of work to do now that I'm out. Well, the market will probably fall off now. Yeah, like Dan says, always happens that way. Yes, it does. You can see here trade forecaster telling us we are in full-on scalp mode here, and that's pretty evident right now as the market really stuck going sideways. Here on the Hawk, we see a lot as well. A lot of yellow bars. All right, so here they come again with the counter trend scoundrels. Well, like I said, we do have a sideways range, and very often the best thing to do with a sideways range is just use your OCO order. What bugs me is if I had left my entry below 67.70, as I knew I should, I would have avoided the earlier sell. All right, well, here we go. We got ourselves a bracketable range. What's likely to happen is somewhere through the course of the morning, the market's likely to retrace at least a little bit before the buyers try to kick in again. But overall, this is still a very bullish market. So I would favor a fill to the long side, but where they're trading right now, it does seem more likely that, that a move lower is likely. We're back into the hard edge. The Hawk actually getting bearish here. We've got a first micro macro cross on the hawk, and we're working a possible trend change signal there as well. So yeah, we'll just kind of sit here and wait and watch. There's not much else to do with it. I'm actually a little gun shy to try the counter trend again. Got bit twice trying the counter trend signal. But this is a very bracketable range what you're looking at right here. Whichever way the market chooses to move from here, it will probably have at least some follow through to it. Funny, we're getting a number one signal here on the Raptor. If you're trading the Raptor, when you get this candy striping going on, it tells you that you're sideways. So again, it just kind of confirms what we're seeing elsewhere. All right, well, there they go. The buyers trying to push this market higher still. Let me get a stop enabled. So we'll hold the stop down here below the bottom end of the trading range. Wow. The lack of momentum is impressive. Come on, there we go. Wow. All right. Well, what do you do with this? I think what I'll do is I will bring my break even right to here. I will leave my stops enabled. And if we can take out that last swing high, well, then I'll take the trade up to break even. Yeah, David says he'd already have his stop up here at 776. It's tough when the market moves like this. You have to try to give it some room. But at the same time, you don't want to get stuck. David's asking, am I correct in my observation that the first number 3 signal after a number 1 is usually a very profitable signal? Yes, the number 3 signal is a continuation signal. That's your hard edge bounce. And it is a very reliable signal for the most part. So what happens is you get your new trend established. That's your number 1 signal, excuse me. That's your number 1 signal. And then the market has a little bit of a pullback. This is the first attempt by the market to reverse the trend. And then, of course, this is confirmation that the new trend will continue. So, yeah, the number 3 signal after a new trend has set itself up does tend to be a pretty reliable signal. Unlike the signals that are developing here, like I said, you get a lot of signals printing, no real follow through. It just confirms that the market is stagnant. Traders obviously very happy with where the market is trading right now, very content with the whole 67, 80 price range-ish. So there's not much you can do with it at this point other than just wait it out. Whenever the market gets stagnant like this, it's so tempting, like I say, to look for counter trend opportunities. And I do believe there will be a move lower. It may not be a huge move, but just the fact that we've been drifting sideways for so long. You know, you look at, where did we open? We opened down here. We had a little rally up, but for the last 45 minutes, we've been in this dead sideways kind of drift. David, just full of good questions here this morning. David's asking, in regards to the support and resistance sweep, what is the significance of the colors of lines? The gold line is your median line. It essentially tells you where the middle of the assortment is. There's 21 lines, and this is the middle. Generally speaking, if the market is above the median line, it's going to be more bullish. If it's below the median line, it's more bearish. The blue lines, the one above and the one below, are the primary resistance and the primary support. As a rule, these three lines tend to be the most influential. Once the market is above this range, once again, it's more bullish. If it's below the range, it's more bearish. The other lines, these are, I call them secondary resistance and secondary support, but they're not secondary in the sense that they're inferior. Rather, they're just follow-up support and resistance lines. What tends to happen is if you get a break above the primary resistance, the market will tend to move two zones. So this is zone 1, and this is zone 2. And likewise, if it breaks below the primary support, it will tend to move two zones, this being zone 1, this being zone 2. So when that happens, that gives you the ability to set a profit objective. And of course, this would have happened. Well, I won't go back. You can go back yourself. But to see when the breakout happened, once it breaks out above the primary resistance line, and it looks like it's going to stay above, you can take the next signal and you could actually shoot for this level here around the 67.79 area as your profit objective, and you can see you would have done all right there. And like I said, same thing happens to the reverse. And if you go through your chart, you'll see that that tends to hold true more often than not. I don't think we're going to get another trade here this morning, folks. The market just really, really quiet right now. I think maybe we'll wrap it up for the day and we'll try it again tomorrow. Or I've got a little bit of work to do here trying to dig myself out of this hole that I've dug for myself. But hopefully the afternoon will loosen up a little bit, might get another trade off before the close. But right now, like I said, the market just a little bit too stale. And I think it's maybe time to go have breakfast and look at it a little bit later. All right, gang, I will see you again tomorrow. We'll talk to you then. Bye for now. Oh, David, right. Market replay. The good time to try the market replay. So, let me disconnect. Yeah, let's clear those off. So with market replay, and you're going to have to bear with me because it's been a long time since I've done this. And did I break something? Oh dear. Did I break my NinjaTrader? Oh. Oh, there we go. Okay. Just took a while. Utilities. Oh yes, okay, I remember what I need to do now, sorry. So let me disconnect the market replay. Once it's finished loading. So connect to your live data. Wait for your charts to load. Boy, my connection is slow this morning. Screen share software, it's too much work for it. Come on already. Oh my gosh. Well, I can't, let me just, no, it's still, I still get the little swirly symbol, so it's trying. There we go. Man. come on. Okay, so now we go here to our utilities, download replay data. So select your instrument, whatever you want. Let's do the NASDAQ. And now you can select your dates. It will always go to your current date. So let's say I want to download the month of April. So I will pick my start date, and by default, it will load from your start date until the current date. So try that. And then when you go to your replay, your market replay, so after that, you will disconnect from your live data, and then you will connect to your market replay connection. It should select your market that you're trading, and then select your date, April 1st, or whatever, April 5th. And you should have that date available from your market replay. So, like I said, the key is here. When you go to download your replay data, click on your date. By default, it will give you the prior day, but you can download as much data as you want. You can download, say, even from March 1st if you wanted. Let's say we want from March 8th to the current date, and it will download all that data for you. All right, give that a go. If you have any trouble, you know how to reach me, shoot me an email, and I'll walk you through it. All right, gang, see you tomorrow then. Bye for now.